We got some unfortunate news for Tesla stock investors as sales figures across the pond in Europe are down significantly year over year. I'll reveal what those numbers could mean for Tesla stock investors and what I think about the company at the new higher valuations since the stock price is up by so much in previous weeks. So according to the European Automobile Manufacturers Association, Tesla EV registrations, which are a proxy for sales in Europe, fell to just 14,831 units in August, which was a 22.5% drop compared to a year ago. But what makes this even worse is that total EV registrations in the region, which includes the UK and the European Free Trade Association, were up by 27% in August, with overall registrations up by 5%. So overall, EV sales in the region were up almost 27%, and Tesla's sales were down 22.5%. That means the company is losing significant market share in the region. Imagine a category where you're having a lot more consumers coming in, right? 27% more consumers are coming in, and Tesla is generating fewer sales than the same time last year, even with all those extra customers coming into the market. That's a really telling sign and really bad news for Tesla stock investors. Now, I understand Tesla stock investors have grown accustomed to ignoring the sales figures for electric vehicles because they've set their sights on driverless car technology and robotics. And so when they see numbers like this, they tend to just brush them off to the side and say, well, that doesn't matter because all that matters is driverless cars. And when Tesla launches driverless car technology, they're going to generate $200 billion in profit. And then when they generate sales from robotics, it's going to generate $1 trillion in profits. And the numbers start to get really, really large, really, really quickly. And so they look at these numbers and say, okay, we can ignore them and we can still buy Tesla stock regardless of all these bad numbers coming out. But I will caution Tesla stock investors not to ignore these numbers, because where do you think the company is going to get the money to invest in driverless car technology, to invest in robotics? Those technologies are not ready. They're not ready right now. They're not ready to be sent out into the market and generate sales and profit. They need further investment, further research and development before they can be introduced to the market. All of that costs money. Where is that money going to come from? Click the link below to watch the full video.